No problem. No problem. So, good afternoon, good morning, good evening, wherever you're at in the world here. Hope to have a super fun conversation this afternoon on markets and mental health, episode one. What is trading psychology? It is a topic that I think is a very important topic for retail traders, investors, institutional thinking, all kinds of stuff. It's just a great conversation to have. This is going to, what I believe is going to be a three-part series. This is episode one, with myself as the host, my beautiful wifey, Dr. Christina Stye, who is a mental health psychologist. She's going to be joining us in conversation. She's going to be joining us in throughout the series. And throughout the series, we have a very special guest, Mr. Arca guest, Mr. who is going to share with us some of his insight and some of his insight, thoughts on trading psychology. Trading psychology. Very well versed in this topic. He's very well versed in this topic, and I think he's going to bring a lot to the table that I think he's going to bring a lot to the table, especially to the retail trading community, especially to the retail trading community. Pretty much what we're going to talk about. That's is focusing on that population. Is focusing on that population. Again, my name is Josh. My name is Josh. I'm a retail trader. Consider myself a novice. Still consider myself a novice in the markets. Newbie. I've been trading in the markets. I've been trading for about a year and a half. About a year and a half, a bit longer than I have. Been doing it a bit longer than I have. And my beautiful wifey, Dr. Christina Stye. My beautiful wifey, Dr. Christina Stye. Call her Christina or Doc, whatever you want to call her. Christina or Doc, whatever you want to call her. But she is here as a newbie. But she is here as a newbie of like a real to the trading markets. To the trading markets. But she's got an extensive background. She's got an extensive background. So, human psychology. Honey, why don't you go ahead and share a little bit about yourself? Why don't you go ahead and share a little bit about yourself and introduce yourself to the community? Introduce yourself to the community.
Hello, everybody. It's good to see you. I see a lot of familiar faces here.
I see a lot of
My
familiar
name is
faces
Christina.
here.
My name is Christina, a licensed clinical psychologist. I have been working mostly with kids and teens for decades. I wanted to get into psychology very early on. So that's my main population with therapy, but I also have been doing a lot of testing, psych and neuropsych testing, specifically in the neurodivergent population. So giving testing weed in or out ADHD, learning disabilities, all that jazz. Learning disabilities. So that is another big area of passion for me. And I am an author. I wrote an author. Playing around with things and not putting a bunch of money in, obviously, because I don't know what I'm doing. But I have been taking Arca's master class as well that he has been offering, and that has been super fun and exciting for me. And I love I know statistics from psychology, so I love all of the stats and everything behind it, and that's being really fun for me, and I'm learning a lot. Um, and so, yeah, this topic is really interesting and very exciting for me because it's, kind of blending the psychology side of things, which I know a lot about, with the trading side of things, which I don't know hardly anything about, but I'm learning a lot about. So it's fun to be with you all, and I'm excited for our discussion today. Beautiful. Arca, are you back online here and able to take the microphone again?
Yeah, Battle. I was actually just getting some issues out of the way that the community in YouTube were telling me that they were experiencing some echo, and I think I just eliminated the echo. It was a little strong at the beginning, so there was a little bit of difficulty receiving audio. So what I did is I'm actually using my I'm actually using my microphone to pick up the signal from the speaking of Twitter X, and I'm speaking directly through the through the HD system on my microphone. So my voice may be actually preferred on the. It may actually be just in utter clarity, like in comparison to the Twitter Spaces uh, quality, I guess. In comparison to that. So I hope it's okay. Everybody said that it's everybody's saying that the volume is a little weird or whatever, but it's working. At least we have that. So I'm gonna try to put this the tablet volume very close to the microphone. But yeah, I think we're good to roll at any moment. So, but yeah, I'm back, battle. I am here. So we can get this thing rolling. Just where do you think we should begin? I know we have a couple of topics as far as the ones that you were speaking about to me, but if you have if you can elaborate on the first one, then I can go ahead and take a couple steps forward there.
Well, I think for new listeners, Battle, I think you should introduce yourself and who you are, and what you do, and your involvement in the trading community, and just a little bit of background on yourself.
All right, so yeah, yeah. For those who don't know who I am, my name is Arca, and I go by Arca Bulls in the social platforms. I am systematic. Uh, I say it on my introduction, or I say it as a, I'm part discretionary, mostly systematic. Uh, I used to focus on small cap companies and small cap data, but now I am more leaning towards the blue chip mega cap area, and I think it's the shift was important in order for us to get retail to kind of expose themselves into a different avenue of the of the market of the market the citywide market, right? And so I focus on data analytics, mostly using statistics and discretionary charting techniques in order for me to determine market trend in either the micro time frame or the macro time frame. And I've been doing it for about 2 years, and I became consistently profitable between 6 and 9 months. And now I'm happy to be sharing the knowledge with what turned out to be, I think, about just a little over 160 students now. And Arca Bulls is thriving, and it's certainly something that I am grateful for. But that's me, and that's what I've done here. And thank you, Battle, for the introduction. I'm really happy to be here and share some of this psychology thing, because I can't tell you how important it is for us to focus on the psychology. My mentor himself was telling me, man, this is 70% psychology, 30% skill. So let's make sure to get our heads together here and really dive into to being a true participant in the space.
Awesome. Well, we as the retail community are super appreciative of all you've done for the community, your constant lives that you've done on ticker analysis, because you're very good at analysis. You're a mathematician. You look at the charts, you see them through your eyeballs. That is, it still amazes me every time you look at a chart and how you see it, you visually do it, and execute whatever trades or whatnot. It's just been a very fun adventure. Arca and I have known each other almost as long as I've been in the trading community. I've known Arca since this November, December of last year. I think that's about right.
Yeah.
Or not last year, 2022. So we've known each other for quite a while. So anyway, so we're going to get into the discussion here and dive into this. Trading psychology has been an interesting one. I've done a little bit of research leading up to this, but Christine and I did about 6 months ago ish. We did host another series, a mental markets and mental health series, and we talked about topics such as Christina was just talking about control or lack of control was a topic that we discussed, and we got into radical acceptance, emotional intelligence, and then groupthink and confirmation bias. So I think what our plan is this time is we did not capture all of that, all of those conversations, and keeping them live for the trading community. But we're going to do another series here, probably rediscussing some of those topics. But this afternoon, we're going to talk about trading psychology as a whole, kind of a broader picture, and then we can start picking down into some of the subtopics. But yeah, so trading psychology is, like you just said, Arca, what did you say, 70% psychology, 30% ability, technical understanding?
Yeah, my mentor would. I'm not sure how true it holds in the overall market, but my mentor did mention something like that. He said to me that trading was a 70% psychology, 30% skill. So if that's the actual truth here, then there's I actually I my actual response to him was like holy cow, like I have a lot to work on. And he said if you didn't respond the way that you did, then I would be worried about your participation in the markets. And he said that humility is key, and that this balance cannot be overtaken by either greed or fear. In fact, the greed and fear become this alliance in trading, man. And the 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 white black or the red green balance, it really becomes a real thing. And yeah, I'm sure you've heard other psychologists speak about that, but it's it's crucial. But yeah, battle, it is that the 70-30 split, as far as my mentor is concerned.
So a lot of reference that we're going to dive into is, for me personally, and I know you've got a handful of other resources that you've studied, dove into, but on this one specifically, as far as some of my questions or thoughts that I would bring to the table, is in regard to a conversation by an investor by the name of Tom Hauger. And I'm going to post a series of videos that he did specifically on trading psychology. So I'll post those here in the bubble and put them up in the nest here in a second to link to that conversation. It's a 7 or 8 part series. It's about 2.5 hours total. Tremendous amount of information. And the way he put it at the beginning of his conversation, or his lecture that he did, he said, I'm not going to teach you how to trade. I'm going to teach you how to think while you trade. And that's an important topic because we're, human beings. We are emotional creatures, and our brain controls us. And there's a lot of emotions wrapped up in that. And but one thing that really stood out to me at the very beginning of his conversation is he said, people tend to make the same mistakes over and over. So, what are your thoughts on this? The 70-30 thing and what your mentor taught you, but, psychology, the markets are really, to be honest, almost 100% driven on psychology. Not 100%, but, because there's fundamentals and all that stuff. But how an individual investor, and then you take collectively, that's what you see the movement in the chart. That's all based on, whether I think an asset is worth it or I don't think it's worth it. I'm going to buy in high, or I'm going to short this one, or I'm going to do this, X, Y, Z. It's all based on human thought psychology.
Yeah, Tom Hugard is a highly renowned trader. I've been inspired by his work. I will say that the I thought it was a six part. Yeah, I think I do remember it going into a weird smaller part after or around eight. But it is a highly informative trading psychology seminar that he put together, and a lot of what he taught there was elaborated to me through not only my mentor but also through other sources of learning. For example, I am a big fan of trader Eric Crown. He's also systematic, and he's also part discretionary. And the only difference here is that he was a licensed market maker and trader for the NYSE at Arca. So he often spoke about the misconceptions of market makers and and the ideas that retail put together against who what they do and who they are. And I will say that it's uh, it's interesting. It's interesting the confluence of conversation between direct and personal mentorship versus your secondhand mentorship, whatever you're trying to gather from someone that you look up to online as a like a star trader or what may like that. So I did learn through my beginnings things that I may oppose or I may use or with or against the trading patterns or market cycles, and that would be that a lot of the market movement is uh, you're gonna have to take it into deep thought here because you're gonna say, well, which one comes first, right? So I believe that it is incredibly mathematical and very statistical. Now, the reason why it could be uh, arranged as highly mathematical or statistical is because in speculation, I can tell you that I believe that there is a great deal of retail psychology that the algorithms and or market makers or smart money institutional may take into consideration. So if your psychology is leaning towards buy this type of semiconductor or this type of sector, then the algorithm will favor the psychology as buy side pressure, and if the psychology flips into sell side pressure, then obviously the algorithms will favor that sell side pressure, and both in discretionary and a systematic or algorithmic form. And I do, and that's where that junction or that border starts to kind of merge with systems. So it would be psychology versus systems at that point. So if the systems are taking into consideration the psychology from someone, then or from a group of people, right, in a mass collected block, then that's it could be potential grounds to say that the market is driven completely by psychology, and whatever retail believes it's what it's going to do. And all it takes is a spark to the flame before the flame just really bursts and explodes and widens and spreads further and further until it diminishes, which is exactly what retail or the human mind does alongside other humans, right? We like to share, and we like to talk, and we like to speculate, and we like to that we like to converse. So if the markets are algorithmic, I think that it's going to play against some people and it's going to play with some people. Some may believe that this does not have sell side pressure, and some may believe that it has a lot of buy side pressure at some point. But whatever that place is where the market makers and market making algorithms will favor. It's really it's really through my understanding and learnings, it's been that it's market making will favor liquidity no matter which side it is, regardless of the side. And if one side is stronger, that's where it's going to go. Which then you would start to say, well, listen, are they? So, is there no nefarious activity? Definitely not saying that. Definitely not saying that. I will say that there are ways to push price and pull price, and because of that psychological trait that market making can take, right? So let's just say that you're trading a $10 asset, and the asset happens to have a couple of has an institutional presence within it. So that institutional presence, as we all know, has a deep pocket or a huge margin span or a margin range. So that margin can be utilized in whatever side they have, as long as they meet the margin requirement and as long as they're within the bounds of margin. So margin, in other words, used as like credit, just for layman's terms. So if they have a huge credit line or a margin line, right? They'll be able to in deep speculation here, they'll be able to push together what are spoofs. They're known as spoofs, and you'll catch deep in the level two, deep in the bid or deep in the ask side of the spread, spoof buys that are not necessarily things that they're willing to take as a purchase or a sell. They'll just have it as a ridiculous, really high number, way outside of the bounds of a typical bid and ask spread, and that will naturally trigger the algorithms to favor one side. So if they put $1 million at whatever bid is $10, and they put it at $2, so here's $1 million. The algorithm is going to be like, oh, let's get to that. Let's get to that million, so it'll work its way into that somehow, right? And it'll create a sell side pressure. Market making will create sell side pressure, and they'll create a market to the sell side. So naturally, people are going to start getting stopped out, and with that stop out, people will then start to favor the sell side, and then they'll open short, or they'll start longing their puts. You're gonna have institutions shorting calls, and the sell side volume is going to increase, and volatility will increase naturally. So it's a quick way to determine or use psychology in the markets, right? Because without the default presence, and the default presence being us as retail or just a participant in general, there is no market. So then it renders a market maker useless. If it is a push and pull world, without us they can't create the market, without them we can't trade the market. So call it what you want, but that balance is shown almost everywhere in the world. It's the reason why we're not jumping into cyclones and all kinds of weather anomalies. The balance between fresh water and salt water, So, and melting ice caps. That'll create. It'll favor fresh water, which could have implications long term in the weather, right? So, there are certain things, like for example, you're in race cars or race motorcycles, you have the balance of oil versus high octane race fuel. So what's that ratio? And how are those things related to the power output of the engine? So that kind of balance exists everywhere, and it'd be a little silly. And I take into a lot of the speculation I hear behind. From retail coming in about the institutions. Sometimes it appears as very silly because I was trained to look at the markets as not anything other than numbers, and it's just data, and it's speaking. And of course, the data would just measure the behavior from uh, from institutions versus retail participants, and that's a that I think it's a crucial way to observe the markets, right? And I'm not saying that fundamentals don't work, because the fundamental is the driving force to a psychological event, which would then create the buy or sell side pressure, which then the market makers will naturally cascade into creating the market for whatever side that's being requested. So I know that this was kind of a long answer, but I really hope that that can elaborate into um, what Tom was kind of starting with, and also through my learning experience, it was very similar to what he doesn't believe in. He also doesn't believe in. I believe. I'm sorry if I recall correctly. I don't believe that he believes in fundamental analysis. I think he just believes on on the reaction to the markets based on an event, which is quite different.
Yeah, yeah. He took both fundamental and semi took TA off the table. Not that you don't need to know either one, but he said a lot of it was emotionally driven. And that's going to be the next topic of discussion. And I'm going to swing this one over to Christina, because I want to ask her generally her thought on one of our strongest motivational factors is fear. So, Christina, can you explain fear and what that does physiologically to our brain, our responses, our reactions, and then I'll bring it back over to Arca to try to, coincide this with some things that were discussed, that Tom discussed, and how it influences our reactions, our participation, and the market as a whole. So, Christina, can you explain fear a little bit, just in like psychological terms, what fear does to an individual and how it motivates us to choose one path or another?
Sure. Yeah. And this is, I mean, I think even with the series that you and I watched, Josh, and Arc, I think you said you had seen the series too that Tom Fugari did. That yes, fear is a driving force behind. I mean, how we respond in a variety of situations, right? So, I mean, down to our nervous system is determined and reactive to fear, right? So, if any of you have heard of like the fight or flight response, which is pretty big in psychology, but I think it's been, kind of, it's pretty mainstream, I think, now. But the concept behind that is really the difference, in our between like our sympathetic nervous system, which is that kind of fight or flight response. So when we encounter a threat or a potential threat, um, which threat is a very general term, right? It could be anything. If we're going like way back in the day, I mean, the fight or flight response, that sympathetic nervous system was designed to keep us safe, right? If we were coming face to face with a predator, like a bear or a lion or a dinosaur or whatever, right? Our our sympathetic nervous system increases our adrenaline. It increases our cortisol levels. It is the thing that basically drives us to be able to respond quickly and to make an escape, right? Because the whole, I mean, preservation of our species, like, is down to the core, right? We're designed to survive. And the counterpart to the sympathetic nervous system is the parasympathetic nervous system, which is our kind of rest and digest mode. So that's the part that we are in when we are not in fight or flight mode. The, the problem now is that we, because of just a variety of factors, including just the fact that we are like wholly overstimulated most of the day, and our bodies weren't really designed for that, our brains weren't really designed for that. We spend a lot of time in that kind of sympathetic nervous system response, even though there may not necessarily be an active threat, in the environment. But our whole anatomy, our whole brain structure is really designed to have a response to what? To preserve ourselves, to stay safe, and to avoid pain, which the avoid pain part is one of the things that Tom Hugard really kind of like was hammering on in his lecture that he did. So yes, it is a very strong driving force. It is the thing that, and we need it to a degree, right? I mean, historically, it's been something that, yes, it has preserved our species. It's prevented us from making like dumb mistakes and risking our lives and things like that. But it is definitely that fight or flight response tends to be on overdrive, and we tend to overuse it, and we tend to kind of maybe overcorrect, right? Where maybe a situation is not to that degree, but our body and our brain kind of responds in that way. So, and I would say again from, bringing it back to more kind of present time, and especially in the U.S., I have seen there is a really big poverty mentality that I see, and a lot of fear around money and around spending money and around losing money and around earning money. And there is a reality to that, right? I mean, we need, at least in the U.S. economy, we need to be generating money in order to survive, in order to have shelter, in order to be able to provide for our families, in order to be able to buy food, all of that. But that fear, there's a really strong correlation that I've seen, between fear and money, that I absolutely, even just, in the like, few weeks or whatever that I've been trading. And again, I'm trading very, very little, and I'm mostly just like watching certain tickers and watching the market, because for me, that's how I learn. And I have already seen a number of examples where I see fear being the thing that's driving the price action of a certain ticker. So that's been really interesting to watch, of how much influence our emotions have. And I don't think we necessarily always realize the extent that our emotions and our responses, particularly fear, can have on having more of just like a broader, kind of global effect. So I don't know if that answered your question, Josh, or if you have anything more specific you want me to get into, but it's definitely an interesting connection, when we're talking about the market, right? And our relationship between fear and money and all of that good stuff.
That was perfect, and a perfect segue into the follow-up question that I'm going to bring to Arca was, that was explaining that, the fight or flight and, preserving life. Well, we're here in the markets trying to preserve money, make money, and it's we're supposed to be non-emotional traders, but there is an emotion, and it's real money that we're playing, and it can be scary at times, and I think emotion and fear is a motivator and a driving factor. But Arca, a quote from Tom Hoygard, he said, "Fear is what stops people from making money in the markets. Having a special relationship with losing and a special relationship with winning." And he said, he did highlight that, 75 to 90% of retail loses money. It's not necessarily a technical analysis problem. It's a human problem, because there are no crystal balls, and human bias has a significant impact on how we buy and sell as we're watching, even though we have our technical analysis, being educated, being informed, but there is a correlation there with just how the human brain thinks and reacts and responds, like Christine was saying, fight or flight. And so Tom talked about we tend to cut out too early on our winning plays because we're afraid that we're going to lose what we gained. But then he said the weird correlation of when we lose, we tend to just stand in there, maybe not stick to a play or stick to our thesis and act emotionally. Oh, it's coming down. Oh, well, if I bought it at $1 now, 80 cents is a good deal, so I should buy more. So he went into a whole concept with that, but I'll toss it back to you on fear and that correlation of buy and sell and how the human reacts or responds beyond just the technical analysis.
So that's a good place to or segue there, because that is where my inspiration from Tom kind of gets limited or deviated, because he is a strong believer that not even the chart is going to tell you that. Now, for maybe for I guess a long term investment, I think that is valid. But in my perspective, I am a short term trader, and the short term can actually be considered within the same day of realizing gains, or realizing profits, or realizing a loss, actually, at that, for that matter, or within a swing trade potential, which could be anything over a night into weeks, or maybe even some months. So that is where I think I start to deviate from his study, and then I start merging more into the side of Dr. John Ehlers, or Mark Douglas, right? So in these, and also Eric Crown. So it's really right at that junction level, because I don't believe that there is no need for the chart, because like we were observing for ticker symbol TSLA, Tesla, about 2 weeks ago, we were sitting at a, because he always says, Tom always says, you can learn your stochastics and your Fibonacci's, and if I haven't seen the series in quite a while, so I have to try to recall what he said, and really take in how I learned from Tom. But I think I remember him saying that we can always learn our Fibonacci's and our trend lines, and whatever else, and technical analysis, but at the end it really is your fear, or whatever, or it is the fear that's going to disable your ability from continuing to become consistently profitable in the markets. So that's a really open-ended statement, because where in the world would you consider entering risk without a chart? And how would you know that something is not completely overbought, or something has a higher probability of retracement? And I personally use a select, um, a particular set of tools to determine that very thing. So, for example, like I was mentioning, sorry, I deviated here, but I was mentioning ticker symbol Tesla, TSLA, just a couple weeks ago, and I was noticing on the buy daily time frame that stochastics were showing that this was incredibly overbought. Uh, it was at a critical level, and at a level that, historically speaking, the asset tends to reverse. Now, volatility was also at a critical massive contraction, meaning that by that time we had flatlined stochastics at the top. It wasn't favoring upside or downside, but it was right at a level where we typically retrace from on the buy daily. So my instinct was to automatically start looking at how long the contraction phase that we were currently in was. So I started looking back in its throughout its entire trading history of the buy daily time frame, and I noticed that we were sitting at this contraction level that was highly similar. It was, I mean, strikingly similar to the time that where Tesla moved from around a $24 Tesla into a $200 Tesla back in December 2012 into January 2013, and that was high contraction. But stochastics were incredibly oversold, not overbought. So it was the direct inversion of where we were presently. So I looked at that iteration, and it looked like the asset ran for a huge upside based on 10 bi-daily closes. So we would have to wait 2 days, an average of 2 days to print one of those critical bars at critical contraction. So critical contraction at that point would be anything beyond 2.42% of low contraction. So in other words, no activity, no attention, and it's just low volume. So at that point, 10 bars of bi-dailies were printed, and fast forward all the way to 2 weeks ago, we had printed 6 bars, marking the second time that Tesla was contracted in historical levels for that long. So it had been a decade, an entire decade from us. So it's not 10 iterations, but it was 6. So, and having stochastics at a critical overbought level would only mean one thing to me. So that would mean that this is about to revert to a mean. This would be a massive scale mean reversion, and I speculated to the team live, saying that there could be some type of retracement here that's going to lead Tesla down 30 to 40 points, and it's interesting because I think that they're using it. I didn't say this live, but I think that they were using it as a trap against the bulls in retail. And how was that done, you may ask? Well, the uptrend in all blue chips and mega caps and the indices. So we were looking at NASDAQ, NQ, the ES, which is the S&P 500 futures contracts. We were watching the Dow. We were watching even volatility, the VIX. It was all expanding, and it was expanding towards the upside. So, massive upside. And I immediately started getting a lashback saying, what are you thinking? Don't you see the whole world is going up? What do you mean Tesla's going to go down? Well, that's just... I was the only one saying it. I was the only one, I was the only one saying that this is getting ready for a massive drop. And everyone was really speculating on the entire market kind of propping Tesla up to prevent that fail. But the odds were highly against it, and the probabilities for a downside were within the 80th percentile. So the 80th percentile, those are compelling numbers, So that the opposition and my negate against Tom Hugard, where the charts are not needed, are proven day in and day out with my system, and I'm not going to invalidate what he's saying, but I will say that everyone has their own trait and their own style and their own presence in the financial markets and have the edge that they do based on the studies that they create. So if that were the case, if we didn't really need the charts, then why would he be so knowledgeable as to how the Dow Jones index opens up at a certain price if the price on a Friday or a Thursday were lesser than the price of let's just say the price on Friday was lesser than the price on a Thursday, then that typically brings on a such and such decline leading into the Monday. How can you tell me that you don't believe in the charts when you chart it yourself? So I believe that data speaks through charts, and charts are the direct metric or platform to study the behavioral anomaly through the financial markets. So I think fear just to touch on a little bit with Dr. Christina. I've been making notes on this as I go. Sorry, team. So fight or flight is that's exactly what is used by market making or institutions in order to pressure side on one way. They will. It can be. This is a speculation, right? You can be pushed. You can be pushed into that fight or flight area. You can be pushed into the point to where it's like, oh my goodness, I don't know that I can lose any more money from here. And then you will get that reaction from retail, and either you sell, which is going to create more sell side pressure and drop the price, and in turn it's going to create an event to where people start buying more to average down on a losing trade, thus increasing the speed and the probabilities of further loss, mathematically speaking. So fear takes over in a really strange manner, because some people's fear leads into an impulse buy, and some people's fear leads into an impulse sell at weakness. In trading, you are usually told not to sell into weakness. You sell into strength, and you buy the weakness, right? So, and that's also something that I'm sure is going to be very familiar to you, because the saying always goes, um, buy low and sell high, or you have the famous saying from Warren Buffett saying, buy the fear and sell the greed. So all of those are directly correlated to each other, and they are the same amount of bullcrap, left and right, right? So I do think that the markets may appear as a good buy value one day, and they may not be on the second day. But what determines that is math, and what determines that is trend and psychological back testing. So you can find an incredible amount of indecisive purchasing and selling all throughout a phase or a cycle, due to the inability to understand the rules or understand the market cycles. So it's really interesting at that point, because you're going to get taken advantage of in that case. Typically speaking, an asset moves about a multiplier of 2 standard deviations from a mean, up or down, and that's typical for on a daily basis, for an asset to do, even on a weekly or even on a monthly basis. There are several mathematical concepts that can lead into those targets, and a lot of the time those targets lead to inflection points that are previously used throughout the asset's history as a key support or key resistance level. And those inflection points, which could be also known as the critical demand zone or critical supply, that's where the price is usually taken to, right? Because somebody will say, you know what, this is a great price for this asset here. Oh, I remember Tom speaking about this. He did speak about this in saying that if an asset looks good at $20, well, damn, it's down to $10. This looks great, so let's go ahead and buy in again. I remember him saying that, and he also mentioned something very valid too, where he said that somebody would buy they would buy that drop because it's a discount. It's a sales rack discount type of thing, and you're thinking, you know what, let's just go ahead and buy this and average down. When mathematically speaking, you're actually doing what you shouldn't be doing, and that's you're increasing the rate of loss, the speed of rate of loss. So understanding a better bottom or repositioning at a better bottom would be ideal in that scenario, or you would have to honor what could be a stop loss at a certain point and realize that your money will go away. It's already gone without realizing it. It's just that you're holding a position that's just fluctuating your money. You're allowing the broker to add or remove with a higher probability of remove. So it's important to know how the asset can move and where it can revert to, and there are mathematical applications to be able to determine exactly that. And while they're not perfect, they are leading to a better thesis than this looks cheaper than yesterday's thesis. So if we're gonna buy on the this looks cheaper than yesterday's thesis and it's on a sales rack thesis, if we're gonna buy on that, then maybe we don't want to participate in the markets until we have a little better of an understanding over where price can eventually go. So, just a couple more thoughts here. That fight or flight is utilized. Yeah, is utilized in the trade because of that. Because because of the psychology, you're going to test the limits of the human psyche. And in my master's course, I actually touch on the aspect of being a mass psychologist behind your screen, and that is really crucial because you would need to find some type of success in order. I'm sorry, you would need to find some type of success through the means of being that kind of mass psychologist. You are reading raw price action as the behavior in a as a collective group. So every asset is a different it has a different characteristic of psychology built around the mass participation of a certain group. So that group will create one character of psychology for this asset, and this other group is going to create that character for that psychology on that ticker, and then so on. So not everything is going to be able to be read the same way, but you observing more and more of how Dr. Christina is saying that she can see how some driving force may be led by fear is absolutely true. That in fact that's traditional training and trading is just you observe market cycles and you observe daily behavior, and then you start observing that there are critical points where the human psyche either lets go or completely purchases, and volatility increases based on those inflections. So I think I'm not trying to drive away any attention from Tom because I am highly inspired by him and I have a lot of his teachings in my head. But I also have a lot of teachings from systematic based traders, algorithmic based traders that were once quantitatives for institutions and market makers for the American, for risk assets here in America. And I think taking inspiration from or the little bits of information from all of these different sources is critical for you to become the person that you're going to be or the participant that you will eventually be in the markets. Josh, I know I deviated a bit from I kind of I kind of wandered out a bit from the original question. I felt that I just had to take it in a curvature around and really answer it properly. Did I eventually answer or no?
No, you totally did. And here's one that I agree with you on as far as your perspective, because I know you and how you trade. I think understanding technical analysis or statistical analysis is extremely important. Like you got to know what the charts are saying, and whether it be so. Back to the concept of not trading with emotion. Okay, well, I'm setting up a statistical play that has zero to do with emotion, correct? Zero to do. This is my play. This is my buy and sell targets. This is what I'm seeing in the charts. But each trader has their own bias as well. You're a systematic trader. Well, I'm a fundamental trader and partly discretionary, but you're partly discretionary and mostly technical. So I think each trader has their own perspective and their bias, and each to their own. That's what makes the market fun, is because we each have our own bias. But not trading on fear, I think, is an important topic. Hey, I believe in this. I'm here. The fight or flight thing, and I'm going to go back to some notes here that I have. Tom did say our brain is our own worst enemy. as it tends to see it as it wants to. And I'm going to bring this back over to Christina. He used the term apophenia, means your brain sees things that aren't there because our brains are biased. So I think it brings in a whole, this is such a deep topic, and people have been studying it for decades. And, in Arca, you've been, researching just different individuals, not just Tom, but, others in helping shape your perspective. And so, no, you did not deviate too far. You were sharing your perspective, how you see things and how you do things. So somebody that trades like you do has a different perspective than somebody that totally trades fundamentally. Well, yeah, I'm here. I'm holding because I know this catalyst XYZ is coming, and I'm going to wait for it, regardless of what the charts say. But then you've got he went really deep into stuff, as far as, how he would sell or how he would buy. But before we get into that, Christina, do you want to clinically or educationally want to explain apophenia, how that impacts impulses or decisions that a human might make?
Sure, I can do that. And watching the video series from Tom was actually the first time that I had heard that particular phrase, but it's used a lot in a lot of different areas. But and this is and this was my interpretation of things. When I was looking through that video series, I didn't get the impression at all that that Tom Hugard doesn't use charts or any sort of analysis. I think the point that he was making is that our in spite of all of that, our brains are still our brains. And the concept of apophenia is basically that, your brain is conditioned to, it's biased. It's conditioned to see things the way that you want to see it. So he gave an example of that in charting of seeing a specific pattern that was happening on a chart, and our brain, your brain locks onto that pattern. There's other patterns that your brain misses because your brain is biased to see things in a certain way. And so that I think, the point that he was making from my perspective was yes, we, charting and, the fundamentals and all of that are helpful, but you still need to understand what your brain is doing, because your brain is going to bias things, and it's good that your response to certain things is at the end of the day going to be the driving force of how you trade. And if you allow your emotions, if you allow fear, if you allow greed to kind of circumvent what you are seeing as part of your technical analysis, your fundamentals, your charting, all of that, that is why so many people kind of go, even with all of the tools for charting, they still go outside of those and they still make mistakes because their emotions are kind of a driving force. So our brains are going to be just, and this is true for everyone, our brains are biased to see things in a certain way. And so that we are going to maybe see things that we want to see. We're going to maybe see patterns of things that are maybe not there, or there's maybe more than that. And that's true just on a global sense too. That's not just specific to trading, right? We're going to, this goes into the whole concept around groupthink and confirmation bias, which I think we're going to get into in a couple of weeks too, right? But it's all tied together. We're going to gravitate towards the thing that confirms what we are already wanting, what we are hoping, what we are expecting. And so I think I would say that what I took out of that whole video series, and especially that section on apophenia, is just even having an awareness that, okay, this is what our brains are doing. So that awareness is really the first part, because if we're not even aware that our brains are doing something or responding in a certain way, then there's not really anything that we can do to change it, right? But having that awareness is that thing that can maybe have us step back and take a pause of, okay, am I really seeing what is there, right? Am I really responding to this in a way that is this appropriate? Am I seeing the bigger picture of things, right? So, I mean, outside of trading specifically, like, having that to me is like why, relationships are helpful, right? Like, I maybe had an interaction with somebody and I thought it went a certain way and the other person maybe thought it went a different way. And, for me, it's helpful to have close relationships of being able to go, I can go to Josh and say, hey, like, I had this interaction. This is kind of the interpretation that I took away from it. What do you think? Right. And being able to kind of get an outside perspective from it, because I know that my brain is going to interpret things a certain way just because of the experiences that I've had, the biases that I've had, whatever the relationship context was with the person that I was speaking to. So this is I would say, a pretty global concept of just really understanding psychology and understanding how our brains work. And that absolutely does apply to the markets and applies, obviously to a number of other life situations as well. So did I explain that well enough, Josh, or did you have any more follow-up around that?
No, that was perfect, and it was a perfect segue back to Arca, because Arca, you told me like yesterday, I think it was yesterday, while we were talking on the phone. When you do your charting and you're looking at your analysis, you told me, because I think you understand that you have your own bias, and you explained this in your your training class that hey, don't force a chart, don't force it into what you hope might happen, because it's easy to manipulate a chart. And you said yourself to me yesterday, dude, when I do a chart, I am looking to contradict it or reach out to another analyst that and say, hey, am I seeing this correctly? Can you prove me wrong here? Is my thesis incorrect? And constantly doing a check and balance with yourself and keeping your emotion out of it and looking at the technical part of it, that helps shape you, because you said, you're like, dude, I'm going to try, I have my thesis, and now I'm going to try to prove it wrong or make it incorrect.
Yeah, that was going to be my response to Christina, is that the that would be the critical weeks in the master's course are weeks numbers 3 and partially 4 and number 8. I speak about this exactly. I speak about this because the human mind will try to fixate on a certain formation, but I often say that the formation may be there, but it has to be dead obvious that it is the formation. If it's not, if it's not dead obvious, it's not there, and it's your brain. It is your brain showing the bias because you are either long or short the asset. Now, through week 8, which we didn't get all the way through, I also explained the invalidation process of a certain thesis. So, meaning that you're going to create. Okay, but before I continue on that, I'm just going to elaborate real fast on how my teaching method is kind of structured. So, I like to start from the beginning as though you were a first time trader. So, meaning that regardless of your skill level, I expect for us to start from the beginning so that we can restructure the way we think, and then we could make an assessment over how this system works, or then it could be attenuated, or it can be manipulated towards the individual market participant's behavior or character. I am not trying to say that I want to leave the system as is, because the system as is works for my character and for my psyche. So I will never trade like anyone else, and you will never trade like I do. And that's what makes us. That's what makes the individual power within the trading within the markets as valid. It's just there are an infinite amount of variables in the markets for you to be able to grab hold of a group of criteria or a group of conditions and make an entire system out of it. That's just how the probabilities are, because there are millions of different tiny little things that you can look at. From a quantum level all the way up to a macro level. So uh, I teach how to start observing what a candle is, and that's the general, a very very general thing that everyone should just know: the opening and closing bases of a candle, what the range high or range low are within the wicks of the candle or shadows of the candle. Then we move on to formations, and from formation theory, like a lot of people know formations as like a cup and handle or inverse head and shoulders or whatever that is. So formation theory and psychology would lead into indicators and moving averages, and then from there we move on to applications, right? Which is right now where my track 3 students are. And from application, we go into mathematical concepts and mathematical application as well. So from the from that course, going from week 1 all the way to week 17, you are stacking and layering every single last course that you went through. So the candle analysis will stack or layer into the week number 3, where is going to be the formations, and then formations and candles will now become not just the evaluation of one candle; it'll become an evaluation of a group of candles and their behavior in formation thus far, or moving forward, respectively. From there, you would add the implications of what a moving average would do to price and how it would prevent it or support it from going up or down. Now, then you would stack the moving averages with the candles and see how the range high of a candle ended up touching a critical moving average, which prevented the upside from going. So now you merged moving averages and candles. Then from there, you add your indicators, and you're going to notice that, not only did the candles show us that it was a certain type of candle that led to creating another three candles that created this one bearish formation, that then your indicator, right, was telling you that you were completely overbought. So now you're having confluence between your candles, your moving averages as a resistance on top, and your indicators giving you that you were overbought. So now you're merging 3 weeks, and that's what I'm doing with the students. So I show them how every single aspect that we're learning one by one is applied to the previous week, moving forward. So uh, now that you know that, now that you know how that structure is, in the applications week, in week 8, I explained how to come up with something called the TSE model, which is the thesis, system, and execution, based on your analyses or your thesis, so, or whatever you just put together. Uh, once you come up with your thesis, you're using your candles, right? You're telling yourself that, okay, this is a point of this is an inflection point in a critical demand zone. It looks like we can buy at this area. It looks like our indicators are completely oversold. We could reverse at some point here. It's looking good. It looks like volatility is at an extreme contraction, and it's been there for quite a while. Momentum is pivoted towards the upside on a respectable time frame that can lead a continuation to the upside, or the time frame will suggest a continuation to the upside for a few days from that point. Everything is looking good, right? So now the next step within that application is to invalidate your thesis. Without the invalidation thesis, you have no thesis. So until you can prove yourself otherwise, everything is just a belief. If you're going to backtest your upside, you must backtest the downside, and you must know the risk that you are applying in case you are observing something that your mind is unintentionally drawing in front of you. So it's best to look at things without any emotion in the sense to where you do not have any risk opened. Sure, but what if you do have risk? So you would really have to practice consistent data reading and consistent data charting in order for you to determine what that upside and downside could be. When I was long AMC and losing and losing and losing and losing money, and I started learning more and more of this concept, the last thing I wanted to say was what I did. I would say, "Holy cow, this thing is about to drop another 10 to 12 points," and people would call me a shill, and people would do this and that, and I'm like, I am long this asset. That's the last thing I want to say, right? So in that, it was only then when I realized that I had a true separation from a bias, and it took a while because I didn't because it becomes kind of charting and following the you know the process. It becomes kind of addicting in a sense because it'll it will act like a game of chess, right? And so it's a game of strategy. It's a game against an opponent. And what difference is that from trading, other than the fact that you have a live risk, right? Yeah, you have true skin in the game. So from there, it's a puzzle too. I love solving Rubik's cubes. I love I love solving a complex 1,000 piece, 2,000 piece puzzle. I love those. So that to me is that's trading to me. It's the making money behind trading is the cherry on top. That's not what I. That's not what, and it's not just me. It's about 95 over 95% of the traders that I look at and respect also don't look at this as the me as the this is where I go and make money. Like it's not that. It's this is where you go and work your mind and flex your abilities and solve problems. And this is and the cherry on top is that you can get paid to do that by yourself or through a third party or however. It's just the ability to gain something as money is the least of importance in trading. You are going up against the sharpest minds in the world, and the majority of those minds that are exposed to the truth behind trading, they often focus on the process and the puzzle rather than the money. So in my case, I found at a certain point that I didn't care about making the money. I just wanted to be right because I wanted to stop losing. So I stopped trading all in all without knowing. I just stopped at one point, and I continued and continued to study that, and I found that through a series of tests, through a series of rules and the building of this system that I unintentionally built without knowing that I was building it. At a certain point, it was this machine that I could slightly twist and turn little buttons and things around, and I'm talking about mentally, not physically or in code. I'm speaking mentally because the rules were built and they were then automatically being applied into whatever thesis I was creating, and it was saying, did it meet this? Did it meet that? And if it did meet this, what happens with that? And if you do this, then what are the implications, or how can somebody fight back against that? Just like in chess, your opening move can lead to several strategies that can counterpart that one move. You you have to see you have to look to the left, to the right, up and down, and every which way, because you can get attacked at any moment from any other way, and it could be from an opening that you don't even understand. You don't even understand that could completely oppose you. So that's where I believe the human psyche gets tricked, and it's getting tricked because I said this in Formations Week is because our minds are built to place something that's not. It'll place it in front of you, and it's not really there. We do it every day, and we don't realize it. We look up at the clouds, and we say, "Oh look, there's a turtle there. Oh look, that looks like a huge dinosaur, or that looks like this, or that looks like that." That's a human bias, and that's your individual imagination, and it's working you and working the way you think, and we're built that way. So through a system, through rules, and through statistics, that can be either validated or invalidated. And when you do have a confirmation for an upside, try to invalidate it anyway and see what can oppose that. And that's what I teach my master's students is to not rely on someone else's beliefs or a crowd or a signal that's given to you from Discord saying, "Hey, my group and I we're buying because it's going to the moon." My Discord and I are buying because it's going to the moon thesis is going to make you lose money. That's not the way things work. So that's my uh that's my answer, Battle. What are you thinking? Was that cool?
Oh yeah, totally cool. It's like great information. So you're explaining, your process and your thought process. And again, I would go back, each. Okay, so number one here, just some administrative housekeeping type stuff. Number one, this is not financial advice. None of us are giving financial advice. We're just sharing our thoughts and opinions, and hopefully, bits and pieces of this resonate with, you. Um, so yes, number one, not financial advice here, but we're just discussing human thought patterns and our experiences. I have purposefully not taken any microphone requests because we were just having a discussion here because this is being recorded as more of an educational piece. I do want to give a quick shout out, not only to my battle here, Arca Bulls, hanging out, sharing his knowledge and his perspective on concepts that we're talking about today. I do want to give a shout out to Retail United. That's why we're doing what we're doing right now to record this space so Arca can use this as a tool or a resource for his community members, but this is also a tool for the Retail United uh, community. So we're going to make this available. So that's where Christine and I came into play. We were like, well, we should talk about this markets and mental health thing again to give as an educational tool for the broader retail community. So just a quick housekeeping thing there. I think, Battle, I think we've talked a little bit on the discussion. I do want to open it up shortly. I know we got some questions down here in the bubble and whatnot. I put a couple of things up in the Megatron thing up above here, just some slides that were taken from the video. I did do the link to the first episode, but it is a 7-part series. So to watch the entire conversation with Tom Hogard. So that's all up here, up above. But I kind of want to wind things down and just give a final thought because, what you were just talking about, Arca. Some just final thoughts from me. We'll let Christina have some final thoughts, and then you give a final thought as well, because I know you got some things that you want to share, which you can go ahead and put down in the chat now, Battle. Some of the, because, I've talked a lot about Tom Hogard, or Hogard, however you say his last name. But you've got some other resources that you've looked into and books that you've read. So why don't you go ahead and share that, and I'll put that up in the nest up above. But just final thoughts that I had, and we'll kind of do kind of a summary. One quote from Tom was, being mindful of the risk-reward trading philosophy. Um, Awareness, Christina just touched on this. Awareness is kind of like our first step, is just being aware of our own personal behaviors and biases and where our brain tends to go. He said, true profitable trading begins with awareness of what you do wrong. Learn like the 1%, the top 1%, the ones that are making the money, because what did we say? 75 to 90% of retail loses money. Learn like the 1%. Normal leads to broke. It's going to require a different mindset. Don't be fooled by the mind's tendency to jump to conclusions. I thought that was a great quote from him, because, you know, we have emotions, we have fear, we have, a bias, leading our trades down certain paths. Well, if we're losing more than we're winning, kind of doing that self-awareness check and balance, like, is what I'm doing correct, or is the market just working against me? And well, to be honest, the market is trying to work against you. They're trying to make money on the expense of maybe Josh. So maybe Josh needs to change the way that I trade to stay more consistent in the market, because there's no such thing as being 100% trader. I have yet to meet somebody, even Arca, as skilled as he is, he's not 100%. But what he is good at is minimizing his risk and maximizing his gain based on his thesis, his game plan, and execution, because execution was the last part. Executing, right, Arca? Execution.
Yep.
So it's one thing to have the thesis, but the last part is to actually complete it.
Yeah,
and say, that was a good trade.
That's it, man. That's the saying. It's one thing to call the play, but it's quite another to execute it.
Yep, we watch that all the time. Whether it be, the stock market or watching an NFL football game. You call the play, you think it's going to be the right play, and then until it's executed, you don't know if you got your first down or a touchdown, or now you're ready to punt on 4th and 5. But Christina, did you have a final thought? And then again, we would like to open it up to some quick hands, and whether it be a comment or a question, being that we got Arca in here. So we can go ahead and start letting people up. But Christina, did you have a final thought? And Arca, I saw that you posted your link down there to some literature that you've read through and have gathered. But Christina, did you have a final thought on fear, bias, any of that, just relating to this current conversation?
I think this has been a really for me, on the psychology side of things, this has been a really interesting conversation, and I've been learning a lot, again, just kind of getting my feet wet in trading and things like that. And so, I would say that there are so many points that, all three of us have touched on. And, I think kind of coming back to take in all of that and do your own due diligence, and don't ever just go off of, a strategy from one person, right? So we've talked a lot about Tom Hugard today, but Arca was talking about, a lot of other people that he was taking, some of, bits and pieces from. That's important, I think, for all of us, whether we're talking about trading or whether we're talking about any other thing in life, right? When it comes to, parenting or buying a house or going to school, right? Like that, there is a wealth of information out there, and some of it is awesome and some of it is crap. And so, part of that is being able to kind of do your own discernment, and finding a strategy, finding, the things that are going to work for you, as an individual, as a trader, as just, a human being kind of trying to navigate life. But I do think that this thing, I mean, I'm always going to be biased towards the emotion side of things, because that's just like what I'm in. But I definitely think a key, not the key, but a key to trading successfully is being able to have control and regulation over your emotions and over the way that you think about money, over the way that you think about winning and losing and what those concepts even mean to you, and being able to find a way to navigate past the fear, not negating it, right? Fear has its place. Fear is helpful. It's an important emotion. We have it for a reason, but being able to navigate beyond that, I think, is, that's what's going to set you up, because we should not be doing anything, whether it's trading, whether it's having a conversation, whether it's driving. We should not be doing anything when we are in an overly heightened state of emotion, because that is going to just lock us out of the entire rational side of things. And we need that. We need both, right? So it's not that emotions are the bad guy, but we need to be able to be in a place where we're able to utilize both, like both the logic, both the emotion, to be able to make decisions and navigate life effectively. So that's my final thought. This has been really fun. And I'm excited to continue learning myself about, especially, the psychology of trading and all of that, and learning, all of the other stuff, the analysis and the fundamentals. I've just personally been having a really fun time with that. And that's, for me, I'm making it fun. And so, I know for me, like, I'm not investing a lot of money. I don't know what I'm doing. So for me, then, when I have like the wins and losses, it doesn't like matter too much from a financial standpoint, but I'm learning strategies. I'm watching my own responses and reactions to things. And that's, like to do things hands on. That's how I learn with things. And it's being really fun for me. So thank you for letting me be a part of this and be a part of this conversation and in this community as a newbie. And yeah, excited to hear others' thoughts around it as well when we open up some mics.
I'll send it back over to you, Battle, for a final thought on just the overall perspective of the conversation, maybe a conclusion, and then also feel free to, I put a couple of things up here that you shared up in the nest, so your Amazon link of different books, and if you want to talk about any of them specifically, why or whatnot, or I think you shared your Discord as well for those that want to follow you. We, just as retail, appreciate your time here and spending the afternoon with us and sharing a wealth of knowledge on your perspective on trading psychology and whatnot. So, yeah, final thought, Battle.
Battle, yeah, it's really me who has to thank you and retail for allowing me, to even speak here, man, and sharing my side of things. I will say and re-emphasize what Dr. Christina Sty said regarding you following one trader as the one-stop shop for strategy. It couldn't be better said. There are many influences out there, and so many that will display to you um, a different outlook than another. I would strongly recommend for you or one to observe and pick apart the things that really you know kind of they sound out to you, and don't try to trade every strategy. Try to focus on one at a time, and really focus in on that one and build that system and tweak it, attenuate it, and manipulate it. Try your best to really form it, right, and make it become you, right, because that system may open up a world of information that you just didn't know. What I will tell you is that trading has enabled me to observe a trait of psychology that I didn't even understand or knew existed within myself, and I always thought that I had complete control over myself, and that couldn't have been more untrue. I think trading really it'll expose it'll expose the greatest strengths and greatest weaknesses that one has, and it's tough to face and tough to look at it and really be one with what you're what you're looking at, right? It's a true look in the mirror, and I think that any type of career or hobby or whatever you do will something that you take very seriously. I think anything like that would really display things of your psyche that you really didn't know about before. But trading really has done that for me, and it has enabled a side of me that I haven't really known for a long time. I was always a, and I'm still battling with this. I was always a very aggressive person, uh, and very responsive to negative things. And while I still am, I feel that trading has helped me diminish that into an extreme medium, or at least it has helped me uh, confront that issue, or confront when I am that, and that was something that I never did before. Whatever I put out into the ether, or whatever you want to call it, it was left there, and I would never look back again. But today it's not that, because oftentimes, because every single trade I make every day with the team, with the Arca Bulls team in Discord, if I make a mistake, I will come back to that recording, and I will start listening to myself, and I'll start evaluating how and what was happening. Granted, I am running two different live streams. I'm guiding these plays and also socializing all at once, and while managing my own risk. So, granted that there is already a massive distraction, I want to see what inconsistencies there were that led me into making a mistake, because the last thing I want is to create a mistake that can cost anyone, for that matter. We call them paper trades. We call them simulator trades, right? But yeah, I would take high consideration what Dr. Christina Stai said. Definitely take pieces of your favorite. Uh, I look at these highly renowned traders. I look at them like they were my favorite athletes in your favorite sports, right? Like you would look at Stephen Curry, or you would look at uh, uh, David Beckham for soccer in the Galaxy. You can That's the way I look at these guys. I look up to them like they were like these heroes, and I highly respect them. But it doesn't mean that I agree with everything they say. It means that I will take what I feel is important towards my type of trading, and I will add what they show. They're just explaining their honest selves. At least I hope they are. But so far, whatever they've taught and whatever I've taken has led to a certain success, and I do think that I do think that I'm a living example, as well as they are, of that strategy. So I think yeah, I think maybe consider taking a look at some of those stars and some of those world class athletes within the trade, and apply yourselves, and mostly apply whatever trait they have to you, and don't overthink it, and really try to study and study and study as much as you can. But those are my final thoughts, Battle, and I really appreciate you having me here, man. I love to share these things with retail. I feel it's invaluable information, and information that shouldn't be paid for, or anything like that. It should be shared, because that's the good in our hearts, and it should be shared, because people deserve to know the dead truth, and I believe that to be a truth that should be it's worth considering.
That was a great final share battle. And like you always say, trading for you is a craft. You said just like any other skill or hobby. I'm a mechanic. And I learn all the time. I'm constantly learning to be a better mechanic. Um, but you said it. You always say it's a craft. Yes, we're in the markets to make money, but the focus is how do I become better at making the money? Like be better at the craft itself, giving that the priority. I'm hoping, a space like this, or your training class, or any other resource that we have out there that's available to us, to help improve our own game, right? Our own skill set in whatever it is that we're just happen to be talking about the markets, but understanding your craft and growing in your craft. Because even you, I know you're the first one to raise your hand and say, "Am I still learning my craft and becoming a better master at what I do?" You're constantly learning, constantly reading, constantly charting, constantly backtesting, constantly doing everything. And so if I'm not doing any of those things, then I guess my, trading is not going to improve. If I keep doing the same thing over and over and over, I shouldn't expect a different result. So the constant growth, I'm hoping that's the benefit of a space like this afternoon, just talking about how our brain thinks and how that impacts how we hit a buy or sell button, or looking at a chart and how we're drawing our lines, you know um, just growing. I'm hoping that somebody listened to this space and pulls a little nugget out here that applied to them, because you're right, Christina was right, we're all individuals. My trading perspective is different than Christina's. They're totally different. My trading style is different than yours, Babel. I'm learning from you, but taking little nuggets as I can comprehend them sometimes, because sometimes they're way over my head. But I'm growing and I'm learning and I keep pushing. But even you're constantly looking for a new resource, or one of your master students shows you something that you didn't even see. You're like, "Oh man, that was cool. I didn't even see that." But it was because that person thought differently than you did, and it shared something with you to help you grow. So I think that's the whole point of doing these mental health markets and mental health spaces, is to just maybe better understand the way that we think and our thought pattern, which does influence the way we trade or see things. So I thought that was a great share and final thought.
We have a member in the YouTube stream right now. I I can't say that his name out loud because it's just going to be silly. But he wants me to thank you, uh, Doctor Sty, for your contributions and for your outlook, and for your continuous work for retail here.
That's awesome. Thank you for the shout out. Whoever you are, I appreciate it. I love being here. This is I love studying human behavior and human emotions and the brain and all of that. And it helps me. I mean, it's helping me learn about myself too, right? Because I'm also a human. So this has been really, really fun for me, and getting to be a part of, so many different communities, on X and on YouTube and Discord. I'm really enjoying making all of these connections, and using social media for good connections and positive connections, right? Because those do exist here, on top of all of the negatives that we get from social media too. So that's really cool. Thank you.
So bear with me a second here. I'm just going down through the chat comments. So there was a comment down here from Cashflow Kid. I've always wondered how coping skills for managing mania, as with BPD for handling market breakouts or bull cycles, as with crypto, or tools to manage anxiety or grounding techniques that can help when experiencing the intense emotions of making or losing a lot of money. That's a pretty good question. It's a deep question, but that's a pretty good question. Any grounding techniques or thoughts, either one of you, Arca or Christina, from a technical perspective or a psychological perspective?
What is deep? I'm sorry. What was deep PD? I didn't understand.
Christina, do you know what that is? I don't know what DPD is.
BPD. BPD. I'm assuming they're referring to bipolar disorder. That's what it looked like the rest of the comment was referring to, which I'm not seeing that comment anymore. I did see it earlier.
I don't see it either.
And I don't know
was
why I'm
trying to.
not seeing it.
Yeah.
It might. I don't know if it got deleted, but I'm not seeing it anymore. But BPD, I'm assuming, was referring to bipolar just disorder, based on what the rest of the context of the comment was.
Oh. Yeah, Battle. I was trying to refer to that question here, and I'm like, oh man, I'm gonna have to. What am I gonna do? Google it? Like, and but yeah, I don't see the question. But what can you? I'm happy to answer it, just in case it is still there. But what was the question again? I got thrown off by the bipolar disorder.
Yeah, he might have deleted it. I've always wondered how coping skills for managing mania, as with BPD for handling market breakouts, or bull cycles, as with crypto, or tools to manage anxiety or grounding techniques that can help when experiencing the intense emotions of making or losing a lot of money.
Oh yeah, 100%. Yeah. I completely understand it now, and thank you, Doctor Sty, for that. For the the letters. I didn't know what the heck they stood for, but um, since we're speaking about market cycles and data analytics or statistical analysis, there are especially in crypto because it's you're not going to find a higher number of uneducated traders than you will in the crypto space, and those volatile swings are due to the volatile gambler type of mentality, because the sheer belief that something may go to a huge valuation from it being worth 0.0003 in a penny, that's you can buy millions and millions of shares of with no money at all, and it can turn into something really fast. Well, that you can just see how that can kind of trigger the gambling community there. So it's I think that evaluating the statistical outlook in uh, in anything really, trading traditional risk assets, here in the American markets, cryptocurrencies, uh, bonds, futures contracts, forex, any of that really relies upon uh, uh, it really relies upon that system that it collects data, and it collects data from your behavior, so, and it will repeat in fractal, so this is something that will have cycles, because we see it in the smallest ways. We see the continuous occurrences of a certain formation. You keep on seeing that triangle, or you keep seeing that inverse head and shoulders, or whatever. It's because it is in a sense a fractal in some way. I do believe that there is a macro perspective behind that, although I don't believe in immediate short term fractal analysis. But yeah, the system to try to prevent that type of emotional output would be the statistic, and to trade the system based on the statistic, not by a discretion. So in fact, I know a few traders who have completely dedicated themselves to creating high frequency trading systems that trade automatedly, and that would trigger through a bot or an API, right? It would trigger the buy orders, or group complex orders that would be buy, stop loss plus take profit in three levels or whatever, and to trigger also a stop loss to break even at a certain take profit range. So in case price reverts, you will always stay in the green no matter what, and that would be led by creating an algorithm that will have all of these conditions based on whatever metrics that they may be observing or whatever they backtest. And that's one way of removing entirely the emotional side of a trader. But while trading manually and trading by hand, I don't believe that you are anyone, for that fact, no matter what they say. I don't think that they are able to remove the emotional aspect from their from their existence 100% at least. I think that that at some point you're always going to face yourself, and that decision to remove risk from the markets or add risk to the market is always going to be led by some type of emotion or a combination of thereof. So my best answer to that would be to remove complete emotion. Would be to automated trading or high frequency trading systems. That would be one way to do it. But as long as your finger is on the trigger, then I do believe that there is, in some way, shape, or form, an emotional trigger to that, and also an emotional response to it. There will be a bias towards that, regardless of what data says. So if you trade based on statistics only, I can almost bet that it'll outperform you, because the conditions will be with the conditions, from a machine uh, will be zero tolerance, and it'll take the data for what it is, and it'll already tell you what it can make on a based on back tests. So based on your back test, if it looks highly profitable with a huge uh, risk to reward ratio, and which, by the way, these systems will be able to tell you that. They'll tell you what the equity curve looks like over a span of time, how many trades on average are released within a bar, within an hourly bar, 5 minute bar, whatever parameters you set, and it'll tell you how much you're able to make historically speaking. So now, after that's done, then you run what's called a forward test. You let it paper trade for 3 months, ideally 4 months, and see what the returns are based on that 3 to 4 month cycle, and then move forward to applying live risk, which is something that I'm currently doing. I have already two systems that I forward tested around 5 months already, and they're proving highly profitable. And it's something that I'm considering executing soon. But yeah, Battle. Sorry, it was a long answer. It was kind of a. The question was it was just multi-ended.
No, I think that was a good response, and I got a response to that. But I'll let Christina go first. She's got just a general psychological. How does one maintain their composure while trading? Because it's hard sometimes to take the emotion off the table. It's a trained behavior to not do that, but it's just natural for us to still have those emotions and those biases and fear and all of that. It's still natural to have that on the table. So it's like training ourselves and our brains to think a certain way as we're learning and growing in this process. So, Christina, did you have a thought on that?
Yeah, I mean, this is going to be a really simplistic answer, and I know that I'm saying that with the caveat that I know that it's actually like a lot more complicated than this, and that this isn't necessarily the way that people can always do things. But I would say, from a general sense, like, if you are in your head, if you are in your emotions, that is not a good day to be trading. So, that's maybe not necessarily realistic for everyone. If you're in the middle of a trade, or I mean, you can't just like you maybe can't just like walk away from it for a day. That would maybe be irresponsible. But I would say, if you're doing like a day trading or swing trading, and you're not like mentally in the right place, like, I would say that's probably not a day to be trading. Um, and but yes, like, I think that there are ways to work with our emotions, to train ourselves to be in control of emotions. But yes, it's never going to be 100%. And I think, even there was a part in the series that Tom Hugard, where he was saying, like, he had basically like disconnected. He had found a way to kind of disconnect fear from trading. He was saying, it's not that I don't have fear or have fear in other situations, but I've been able to kind of separate myself out from that. But I think that, number one, I don't believe that 100%, because I don't think you can ever 100% eliminate the emotion. But I do think that with like that repeated training, if you are training yourself, yourself in, whatever the environment is, whatever the situation is, that you are able to get pretty close, right? But it is a practice, and that's going to be influenced by, whatever else is going on day to day, right? We show up on different days and in different spaces based on kind of everything else that is going on around us, and some of that's in our control and some of that isn't. But I would say, if you have the ability, if you know that you are not in the right headspace, that's not a good day to be trading. Also, probably not a good day to be making really like important decisions in any area of life, right? Like maybe that's not the day to have like a really serious conversation with somebody, or whatever else is going on, right? We should never be making big decisions when we're in a very emotional place. But yes, as far as like, grounding techniques and strategies, absolutely. There's a plethora of them out there. I would say, different things work for different people, but, being able to kind of bring yourself into a present moment, being able to take some breaths. We very much, I think, underestimate the power of the breath and how critical breathing is for us. And most of us don't breathe correctly or appropriately during the vast majority of the day. We're just not paying attention to it. So I definitely think that there are, a number of regulation strategies that if you are, in the middle of, a trade or whatever, and you need to be doing that for whatever reason, right? You maybe don't have an option to just like not do the thing or disconnect, then yes, finding ways to kind of bring yourself down, re-regulate your nervous system is going to be key. That's not necessarily, but that's not necessarily going to change the outcome. That's not necessarily going to mean that you aren't going to lose or you are going to win in the market, or that your conversation with whoever is going to go well. But that's a key part of it, is learning kind of how to regulate, learning how to ground yourself so that you are then having control over your response and your reaction. So whether or not there's a control over the outcome, you are able to kind of control yourself in the midst of things that maybe are out of your control. Which I think then that's segueing into control, which I think we're gonna hit on one of these next couple weeks too, because it's all connected. It all ties together, in my opinion.
Yep, I was gonna jump in there because yes, you were already talking about the next step, which I think the next space that we're gonna do will be on control. With markets, we don't get. I'm gonna read a quote here. This was kind of my final thought, and take it or leave it as you wish. But this was another Tom quote. He was talking about a very successful investor that he was referencing. I don't remember the individual's name, but their hit rate was only 20 to 30%. Their hit rate was only 20 to 30%. And he said, well, is that a good system? 20 to 30% doesn't sound like a lot. He's like, how does it work? He's like, the answer was, well, whenever the market did not immediately go in your favor or his favor, he got out. Wishing and praying will not make the market do what you want it to do. And I thought that was really impactful because, I could pray and wish, whatever play I'm in. Oh, I got all this and blah, blah, blah. But I cannot control the market. I'm not a market maker, so I don't get to choose the algo and which direction I hit a button to make the market do whatever, because I just don't have the leverage to do that. But understanding, what we have control or don't have control over, I think is a very important topic that we're going to revisit in the next space. And so if I could just re-express this, Christine and I are going to host another couple of spaces in this series. I think control is an excellent one. And then I think, it's come up again. Radical acceptance. So control and radical acceptance, I think, should be one. And then groupthink and confirmation bias. So a lot of us, hanging out here today in a Twitter space, talking about this, stock market stuff. That's a big one because, I host spaces and they're ticker specific, and I'm sharing my bias and my perspectives, and others are doing the same thing, and we all get kind of caught up in the community perspective. But, at the end of the day, Josh, still have to, recognize where my my brain is at. Am I thinking correctly? Am I just following a hype? Or, you know, Christina was saying, I might, have an experience this morning. I get a phone call, and it's not a very good phone call, and it gets me all like angry and emotional. Should I be trading that day? Should I be, if I'm expressing my opinion and somebody's following me, well, you have no idea what place or mindset that I'm currently in. So being able to regulate where our brain is at and working on being aware, Christina was talking about that earlier, awareness of where I'm at. Is it appropriate to do it right now? Do I need to take a pause? Do I, but then you've got the emotions of like adrenaline. It's not like I'm driving my race car, Arca. I'm not driving my race car and have control over that nitrous button. Sometimes adrenaline hits, and I don't have an on-off switch for adrenaline. How do you, what do you do when adrenaline hits? You see a stock running, or you see it just drop out from underneath you. And understanding your risk management strategies, where you're at, and trying to minimize the emotional impact and be in logical mind while you're trading. But it is very hard to take emotions off the table. It is very hard because, especially if you're trading real money and not, paper trading, that's very hard to do sometimes, especially when, that fight or flight comes in and the adrenaline starts pumping. How do you, learning how to manage it, but also being aware of when that does happen to make sure that you've got yourself in logical mind versus emotional mind.
Battle, I need you to make it to week number 14 if you can. Because I will show you how. The answer to that is more logical than you think, and it'll help you. It'll help you really not have to rely on that, or even apply. You're going to, like what Dr. Sty was saying about about your inability to 100% remove that emotion. I say that all the time too. I 100% agree with that. And I don't even think that you're removing it at all. Actually, I don't think you're even removing it one bit. I just think that you're coexisting with it, and you are more and more comfortable living by it. And that doesn't mean, and to me, I don't think that's you removing it. That's just to me that you're just in a room that smells like crap, and eventually you get used to the smell of crap. It never disappeared. You coexist. So, with trading, and you're noticing this parabolic upside, and it's an impulse that you've never really seen before. The math still exists, and the targets and inflection points, although may be completely ransacked out of the way, the preparation for the trade, and we do this, like for example tonight there's going to be a market prep for tomorrow. We know where those targets are prior to trading, and that that like rush of emotions, you as a human would actually expect them to show up because of the potentials that the data are already giving you. So, and you already have a plan. So the more insecure you feel is because you didn't prepare for that, or you don't know how to prepare for that. So if you do prepare ahead of time, and you know that there's an impulsive move coming, then you'll be prepared with the upside or downside in order for you to take advantage of. So you're never gonna call the top. You're never gonna call the bottom, and you're never gonna reach it. There is the really rare. There are your points here and there where you say I caught the very top of that, but then you look at the daily time frame and you're realizing it's actually going to continue to the upside for maybe another $40 over the next 3 weeks, but you're only looking at the 5-minute time frame in this tiny perspective. So we really left a lot of money on the table if you think about it. So we'll never know what the top is, and we'll never know what the bottom is. We don't hold tarot cards here. This is not the way the markets work, and they will never work in that way, right? But what we do have is probabilities, and we have math in order for us to tell us what those higher probability targets could be, and those are the ones we take advantage of. We take advantage of what we can, and we magnify what we are able to magnify. So it's as I'm saying, battle, make it all the way to that to with me to those weeks, and then you'll see in the execution weeks that it's like, wow, there is so much more. And I know a lot of the Arca Bulls members trading with me live in Discord in the morning. They see it live, and they experience it, and then they're like, man, that was so fast, or it was I didn't realize it was going to happen in the first 28 seconds of the day. It's like you know, we prepped the trade a night before, and we were in and out 28 seconds, 60% plus. You know, so it's those impulsive moves and those parabolic upsides or downsides, they happen, man. They happen really quick, and we have to be completely sharp and willing to take advantage of those situations, and more importantly, be ready to take advantage of those situations in an educated way, and not away from a guess, more towards more towards uh, more towards you know, just a calculated move. But that was my quick little note to you, Battle.
Sounds like the exact opposite of hopium. The contradiction to hopium.
Hopium, man. Know, can't trade on the hopium thesis.
No hopium trading.
Nope.
But hopium is one thing when you look at fundamentals. I'm a fundamental trader. You know that about me. I'm very fundamentally driven. What's sitting there on the horizon. But I'm not, a short-term trader where I'm in and out, take my 5, 10, 20 plus percent. Or if I lose, 3, 4%, 5% on my stop loss bet, next trade. It's not emotionally driven. You're just on to the next one. What's next? Because, there is no crystal balls. If we had a crystal ball, we would never have a losing play, ever.
Yep.
There's no guarantees in the market, ever. We have mathematics and statistics to prove out, a play, but, shit happens all the time. Shit happens. All of a sudden, a company comes out and puts out some negative PR, and we've seen the overreaction so many times, and broke charts and whatnot, and it does happen, but understanding your play, knowing your play, and whatnot, and preparing yourself for the mental ride along its journey, and it might take 10 minutes instead of 5. It might take 3 days instead of 6 hours. It might fall out of nowhere, but at least you were prepared what the possibilities are, what the average true range might be. But even those, with as much back testing we could do, there's still no guarantee. Otherwise, Arca, you'd be like as rich as Elon Musk and doubling every day, because it would be like Marty McFly coming back from the future with his sports almanac. We'd all know what all the plays were, and we'd just be making billions. So, just having the correct thinking, not the hopium, not the whatnot, an educated play. And if it fails, fine, move on to the next one. If it runs, great, I've got my play in place, and, and hopefully, we're on a process of regularly making money instead of regularly like the 90% losing all the time. So it's just a different way of thinking, and that's what we're talking about.
Agreed, Battle. Agreed, and well said. Very well said, man. That preparation is key. and it's something that a lot of people they take very lightly. Um, but yeah, there's absolutely no guarantee. Um, but following your plan and having strategies and knowing what you can do during those situations, it's there's an infinite amount of ways to take advantage of that, man. And I think I think it would be quite a different space if there were guarantees. It wouldn't be there wouldn't be the opportunity to gain or to make a big move. It would everything would be based on a calculated one result thing, with guarantees in it. It wouldn't be you wouldn't exponentially grow if that were the case. So in other words, yeah, we kind of benefit from uh, having a market that in a sense runs on chaos, right? We as we as clever traders figure or find a structure within that chaos, and we'll find those higher probabilities within that, and then from there, yeah, and then from there it would on a day trade, sure, it's going to lead to some discretion, but it's going to be ultimately up to you how you can pick up that dollar because look, I mean, you can look around you anywhere in the streets. It's in your city. It's full of money. It's everywhere. It's just how clever you are at picking that up, and how much of it do you want?
Yep. Well, let's change that percentage instead of the top 1% taking all the money because it's a transaction. So at the end of every, transaction, there's a buyer and there's a seller. Somebody's winning money and somebody's losing money
Zero
on
sum.
every transaction.
Yep.
And so if the 1% are doing it, think more like the 1% and less like the 90 some percent. And, being able to play differently and maybe as we get smarter as investors. But, like you said, that's big money out there and they're making big money because we're bringing in the money. We're a lot of times the loser on the end of a transaction and they're the gainer, but they understand the market psychology, when it comes back to the algorithms. And, that creates fear, back to the fear thing, showing, a massive, bid or an ask, and it's, causes the algorithm to naturally navigate one way or the other. But if all of a sudden I see, a big ass, bid sitting there for, 50,000 shares, I'm like, oh shit, this is where we're going. This is where it wants to drive to. Shit. Being aware of stuff like that because I know that's where it's going. But I'll sit there and be like, I'll hold, and I guess I'm going to put my bid at, 1 cent or a half a cent or a fraction of a cent over that big, bid order, and because I know that's where it's going. But instead of selling and then waiting for it to drop down there and re-enter, if I'm still in the play and I believe it, why not, sell, re-enter, and minimize the amplification of my loss if I'm still planning on making the play anyways, because I'm a fundamental trader. So I'm waiting on a catalyst, but the market's going to do what it's going to do in the meantime while I'm waiting on a news release or a PR. Understanding, my play better. So I don't know.
Yeah, I mean, look at it like if it's your asset is kind of floating around in a vast sea, right? So while it doesn't while it's not experiencing any reason for it to be pushed one way or the other, it's ultimately just floating around and just moving based on its broader current. So wherever that goes is where you're gonna go. So that kind of knowing that kind of vastness is what prevents me from holding in a transitionary market or transitory market. So if we're in this middle ground where essentially overbuying or consolidating, then I'm not certain that we're in a bullish or bearish market. So I would really like the confirmation for a bullish market in order for us to start making the cascading of waves from from your larger indices all the way down into your IWM and micros, right? So then I know what side of the current I'm going to want to long or yeah, long actually because of investment strategy. When you're in a bull cycle, it's like you could throw a dart to a wall of a million tickers and you'll eventually make money just by holding it, But during a correction, or as we've experienced over the last 18 months, really, I mean, actually, it's been a little over that. Uh, your typical correction is 547 days, and the equivalence of around 18 months. It's a long time for you to try to find something that you are willing to buy and know that you're potentially not buying the bottom, right? Because what's cheap can be cheaper, and when it's cheaper, it can always be cheaper, and that's something that's hard to it's hard to accept and hard to really come into terms because my goodness, man, you can get yeah, if you're not willing to invest in it, then it's just you're going to be in for a ride because your returns are not, as an investment or investor, your returns are definitely not in the interim or not in the short term. Your investment strategy would be to add at a certain point, and if the price continues to the downside, you add there. But you're preparing for the year, not for the month or the week or the day, let alone. Because I see oftentimes that people say that I'm an investor and they will invest in a company that they believe in, but they are sticking to the 1 minute chart every single day of their lives, not understanding that your investment strategy is leading to a year. So what are you going to do? Are you going to stay there for a year and observe the chart in the 1 minute chart? Is it 1 minute at a time in a year? That's ridiculous. So we can play the financial markets in other ways if that's the time frame that you want to be in. So there are other strategies for that. Battle. I hope I didn't step on any toes on there, right? But I'm just expressing an honest truth, and really, please don't. I hope no one is taking that into any type of offense. It really is just an outlook.
No, well said. No, you didn't step on my toes. This is just, again, an atmosphere. This is like the greatest benefit of having these, Twitter spaces is being able to have these open dialogues and perspectives and thoughts and share and grow together. Battle, you and I are in this together. You're at wherever you're at in this process, and I'm at wherever I'm at, and just being able to share back and forth perspectives and thoughts and continue to grow. Who knows? Josh might be smart enough someday to say, Arca, did you see this one? Oh, I noticed this because of some skill that you taught me that I grew out of. And, isn't that the whole point of planting a seed?
That's my purpose. Yeah, Battle. I hope for that. I promise I hope for that. And I say it to the students all the time. I tell them that I hope that you can surpass me because I know that some of these people are so hungry. That they really want to take advantage of the sharing the knowledge. And I promise I am trying to be as descriptive and as open ended as I can be with every question that the master students have after. I say a 30-minute Q&A, but apparently that 30-minute is actually it's read as 2 hours. So so I will sit there and I will answer every single individual question because I will fulfill my promise. And I don't want to hold anything back. So if there are things that they or you can ask, then there's going to be some tough questions that'll probably lead into making this a 32-week mentorship instead of a 17 one, right? But it's okay. I think I enjoy this so much, and I really love what I do. So the more time I spend with it, it's okay. I may get a little lashback from the wife, and my son may be knocking on the door like, "What are you doing?" But it's all good, you know. I'm gonna be there eventually. Oh my goodness, man! But yeah, Battle, I love you, man. And
Well, I told you this. We were going to cap it at 2 hours, and now we're at like 2 hours and 20 minutes. Granted, we had a little like administrative time in the beginning just to get the space fired up. But yeah, I don't want to keep you either, Battle, from the family. But I think everybody that listens to this is going to be like extremely appreciative of your time that you shared, because I know where your heart is, and you and I have known each other a long time now, and I think it's going to be super beneficial for individuals to hear in the retail community. Take it or leave it. Whatever you found is beneficial to you as a trader individually. But you've got resources in the community like yourself, Arca, and I see others down in here. I won't call out names. Ronald, I see you down there. That are amazing resources to have. Even Christina, she's not a professional trader. She's a newbie, but she understands some of these topics that we all experience, no matter what we're doing. But bringing it specifically to trading, it does have an impact on even how I think. Just listening to what she's saying and expressing and sharing her thoughts. Because we purposefully, we were both watching that Tom Hogarth video together, or that lecture, and both of us each individually walked away with something different, and we purposefully did not talk about it, and waiting for the space for her to share her, unbiased opinion or biased opinion without influence from me in our discussion. So I was excited to hear just what she had to say about it. And then, Arca, you and I have not talked specifically. We have, but, you brought out a lot of information that you and I have not talked about before. So having these opportunities in these spaces to just come in, share, roll with it, however, it was organic today. The conversation was, a little structured, but mostly organic and sharing. So I think it was a great space. A very great space. So one last plug for you, Arca. We got up here in the nest. You posted an Amazon storefront of books that you've read and recommend. You use these books for your students as well. I thought you posted your Discord up in here. So if you'd like to join Arca's Discord, or just give them a follow on Twitter here. Your DMs are open, correct, Battle? You are always catering to everybody, so your DMs are open.
Yes, they're open, and I try to answer. I try to answer as many as I could, although sometimes it does get a little cluttered. So it just hit me in another DM somewhere. So I'll try my very best. But yes, I typically answer.
Oh, you bend over backwards for everybody. I know you try to do the best you can, but you get bombarded with all kinds of stuff. But again, on behalf of the retail community, on behalf of Retail United, I want to thank them for the space as well, and as a sponsor for the broader retail community. But a special thanks to you, Arca, for coming out and hanging out with us and sharing your knowledge and perspective. So thank you on behalf of all of the retail trading community. Thank you, Christina, for coming in. But we've got, fortunately, we've got 2 more spaces that we're going to host. If anybody's got any questions or suggestions on topics, we would be more than willing to look at them and, consider them as a potential space topic. But so far, we've got 2 more planned, and we will host them at, it would be 1 o'clock p.m. Sunday afternoons for the next 2 Sundays. I think we're okay with the football season. I don't think we're going to cross over any of the games. But 1 o'clock p.m., which would be 2 o'clock Central our time, and then Eastern, or
12 o'clock Central our time.
12 o'clock Central. Yeah, 1 p.m., 12 o'clock. I get the time zones mixed up. 1 o'clock p.m. Eastern, noon Central Time, 10 a.m. Pacific Standard Time, which is Arca's time. And maybe Battle will get you back into another space, and we'll talk about more topics. But I appreciate it. We appreciate it for spending your afternoon, morning with us.
Love you, Battle, of course, man. I was happy to do so, man. So I'm also gonna host a market prep tonight, and so it really depends on what time. But yeah, just keep me in the loop, right? I just want to make sure that the Arca Bulls trading team is ready for the battle coming up.
Right on. So what time is your pre-market prep?
Well, since it's not a weekday, I'm gonna try to do it a little earlier, so it may be around 6 p.m. my time or 7 p.m. So because I know that it's gonna be a little late for the east side for New York time, but I really want I really want to try to favor the Eastern time zone. I want to include them too, so that sometimes I have to plan 3 hours ahead, so that they can also be a part of it because I have a lot of members there as well. So it may look like more like 5 or 6 my time.
And so that's purely on your Discord, or do you broadcast that live on YouTube as well?
The guided trades and plays live during market hours. That's shifting to strictly the Discord, and I'm just going to be streaming a very short pre-market in the morning into the public YouTube. But then I'm gonna go back in. I'm gonna go silent with the Discord team. Or I'm gonna go dark, right? So, but the market preps are usually public, and it's YouTube.
Right on, right on. Well, love it, Christina. Did you have another, second, third, final thought before we close it down? All right, we're good. We're good, unless you want to say something. But I think we'll close it down. We'll wrap this up. Again, this is being recorded. Not financial advice, but a lot of good information and discussion. And we'll share this out through the community. And I think Arca's got it captured on YouTube, so we can continuously share the link. But awesome. Great conversation, everybody. I appreciate it. Love you all. And it's Sunday, so we'll get prepped for Monday morning for the market to open back up. And we're going to think differently, right? Maybe we pulled something out of here, and we're going to think a little bit differently coming into tomorrow. But great conversation. Thank you, Battle. Love you, man.
You got it, Battle. Love you too, man. So hit me if anything, dude, and we'll chat.
Right on. Well, thanks, everybody. I'm going to shut down the space. We'll talk soon.
Yeah.